Welcome back. Well, it is definitely subdued for the markets at this point in time. We have the Nifty, which has recovered from the day's low. So currently just about 17,100 is where it's holding at. But it's not only subdued for the markets, it's been a largely subdued listing for the auto component manufacturer Divgi TorqTransfer Systems. We have with us Jitendra Divgi, who is the managing director at the company, joining in to discuss more about the company's plans now that they have listed. Mr. Jitendra, thank you very much for joining in. Well, now that the company has listed, you all have made your debut on the markets. Can you give us some details in terms of the growth for the company? We do understand that you all have clocked in a revenue CAGR of around 21% between FY20 to FY22. Is this sustainable?
First of all, thank you very much. I appreciate this opportunity and this privilege of coming here and sharing some insights with your viewers. What I would say is, I think I would focus on the strengths that we bring to the marketplace. We sort of live in volatile and uncertain times. And so our focus is going to be on, the basics and fundamentals, keeping our processes that make us agile and fast to respond to eventualities in the marketplace. And based on this, I'm guardedly optimistic that we will be able to, deliver growth value to our investors.
Okay, but is this run rate possible going forward based on what you are seeing in the business, a 20% CAGR?
Yes, what I would say is that there are two big trends that I think present considerable opportunities to not only us, but our peers in the industry in India. One is, the disruption that's being caused by electrification, and it is compelling the big OEMs and the tier ones in the world to figure out how to address their businesses with a shrinking base of their legacy businesses. And that, I think, is one of the imperatives that is driving reconfiguration of supply chains. The second one, where we are seeing the outcomes of this trend is, hedging bets on sourcing, where previously there was this almost exclusive dependence on sources in China, and people are beginning to hedge their bets by bringing in India into their options. And we're seeing a little bit of that happen also. So given the way, inquiries are coming in, I would say that the prospects look pretty promising.
Okay, so just on these two factors, the fact that you could probably benefit as a China plus one company, and the second being EVs, how much are you getting from both these segments separately when it comes to your order book?
What I would say is that it's not just these two trends. These are some global drivers. Besides this, of course, we are seeing robust growth within India. And what these forces are driving is also a certain pace of change of powertrain technology, which is the sector that we operate in, and our ability to effectively transfer and sort of assimilate state-of-the-art technology, which is what we've been doing for the last 25 years or more, I think positions us very uniquely to operate in the area of conventional manual transmission, state-of-the-art four-wheel drive systems.
Sure, Mr. Jitendra, we understand the opportunity on a larger scale. We'd like some numbers in terms of what the order book is currently looking like.
I think our past performance, I think, is a reliable indicator, and I think it would be a little premature and perhaps a little inappropriate for me to,
Can you share your current order book with us?
I think suffice it to say that it's pretty robust. We have been pretty gratified and surprised by the rate at which these inquiries have been coming in, not only from OEMs across the world, but also some very large tier ones. And it's across the board, I might add. That is to say, United States, Europe, and the Far East, including Japan and Korea.
Okay. Just a quick last question then.
So
one concern
I would
is...
say that plus, yeah, sorry, go ahead.
Sure. One of the concerns, sir, has been the high confidence revenues come from your top 5 customers and 54% of your revenue is generated from one customer. Can you just tell us what the plans are to probably diversify that?
Actually, what I would say is I would suggest that you don't look at one data point from a year or 2 years. This industry, has to not only contend with sort of a volatile environment around it, but the product development process has a gestation period. And what I would say is that we have many irons in the fire, as they say, based on our strategy for geographic diversity as well as product and application diversity. So geographic diversity naturally brings customer diversity. And as we erect the revenue streams of EV and other automatic transmission products and parts, I think we will see a natural diversification of our revenue portfolio. And if you actually zoom out and look at a longer,
sure.
A wider canvas of past years, you will very much see this
sure.
process at work.
Okay, all right, Mr. Digvi, we're going to leave
So
it on that.
I'm reasonably confident that, yeah. Thank you.
We've run out of time, but we'll definitely touch base with you and hopefully you'll have more specific numbers to share at that point in time as well. But thank you very much for joining in and talking to us. So that's the management of Divgi TorqTransfer's new listing, stock down around 3% on debut day. Time for a short break. We'll get you more on the markets once we're back. Stay tuned.